Hey everybody, Bob Knakal, Chairman and CEO of BKREA, coming to you from the Knakal Map Room. Today we're filming the Bob Knakal Show, and our guest today is none other than Don Tepman from Town Center Capital. Now, you may be thinking, who's Don Tepman? You probably know him as the strip mall guy. Don has one of the biggest followings in commercial real estate, over 400,000 followers on his various platforms. And Don has a tremendous story. He's known as the strip mall guy. He buys strip malls, but he hasn't always been an investor. He started out as a broker and transitioned into being an investor in strip malls. Don has a fascinating story. Can't wait to bring his story to you. And he's on his way in. So can't wait for the show. And of course, we have to say thank you to our major sponsor, CRE. So I have to tell you, we use CRE every day. Our whole team here at BKREA does one thing and one thing only. We represent sellers and we represent them exclusively. And all we try to do is maximize the sale prices that they get. How do we do it? We use that great tool, CRE. Almost everybody in the office is on that almost all day long as we figure out where to find that next buyer that could possibly pay the highest price for one of our clients' properties. CRE. It's the most powerful platform on which you can prospect, evaluate, connect, and close any commercial real estate transaction. Thank you so much to our good friends at CRE for sponsoring the show. Welcome. Let's get to it. Don, welcome.
Thanks for having me.
Thanks for being here today.
Pleasure's mine. Absolutely.
So I've heard of Cupertino twice in my life. Once was when I got my first iPhone and I looked at the weather and it automatically had Cupertino plugged in.
Yeah.
I think Apple is headquartered there. But then you grew up in Cupertino. Second time I heard of Cupertino. Tell us about growing up in Cupertino, California.
Yeah, I did actually. My elementary school was literally next door to Apple's, original HQ. And so, I was literally grew up around that tech world, and everyone around me was in tech. Almost no one was in real estate, actually. So ended up being just kind of a lucky break where randomly my parents ended up, putting me in a school next to Apple, which, led to a lot of great things after that, actually.
You grew up in this tech environment and you turned out to be a real estate guy, but was that the intention from the beginning?
No, I mean, I knew less than zero about real estate until I was about 22 years old.
Well, also when you were young, you started some businesses, right?
I did. I was always entrepreneurial for sure. I would go ask neighbors if I can, have them pay me to take down their Christmas lights, things like that. And during college, it was 1999, and myself and everyone I knew had a tech company during college. So ours was called College Elite, where it was an intern placement company where we would go and help eBay and PayPal, Schwab, et cetera, screen interns at different colleges. And so they would pay us like $1,000 for every intern we placed. And then our buddies that were at Stanford, USC, all these colleges would just recruit their peers. And so, I was very much doing the tech thing and thought that would be my life for sure. And then the dot bomb happened where, everything crashed and we all went from day trading in our dorm rooms, which literally all of us did, to, now what? And so, I graduated in 2002, kind of wondering what to do next. I was, a bit lost, and a family friend said, hey, I've got a broker. He does shopping centers. And so I went to this interview. I didn't even know what he was talking about, but he kept showing me his commission checks in his drawer, like $85,000. That was when it wasn't wires as much as it is today. It was like 40 grand, 60 grand. He saved all of his checks as a recruiting tool. And I'm like, I don't know what this guy does, but
hopefully they were copies of his checks and he had actually
still
deposited them unless he's really, really rich.
I'm not sure actually. So I think that was my hook. Okay, well, let me see. Like, I'm not sure what he's doing.
And that was a small kind of no-name company that...
Yeah, it was, it's known within that county, right? But nothing beyond that. And I didn't really understand what he did whatsoever. He offered me a job that was commission only, no salary, show up every day at 8:30 wearing a tie. And, I said, let me see if this something where I can also get these $85,000 random checks in my drawer. So...
And you loved cold calling right off the bat,
oh my goodness. There's nobody in real estate that hates cold calling less than I do, funny enough, but it's just something that you have to do. my first day, he literally printed out 100 owners and just told me to call them. I didn't really know why I was calling them. I didn't really have a pitch. He said, just call them and I'll see you Friday, kind of deal. So petrified. I'm sure I sounded terrible. Didn't really get anywhere. But he also had about 70 shopping centers where he was the listing agent. And they're all like, class B-ish centers. And so I would take those sign calls. And I started meeting with nail salons and sushi restaurants to help them open stores. And then I was naive enough to think that, oh, well, this might not be a fit in our center, but let me represent them as their broker, where it's like a $800 commission maybe. And so I started meeting with these mom and pop tenants and helping them find space. And then, in that learning what they look for in their real estate decisions.
Got it.
Yeah.
And then, so how long did you last at the small no-name shop?
No name shop. They're going to kill me. I was there, I think on month number 9, I made like a $5,000 commission, whatever it is. But then after that, I would lease a couple spaces. And then I learned that when you're doing leasing, you're getting to know the owners really, really well. And they love you when they're leased their space, right? It's like, oh my goodness, give you a hug, thank you, right? And so that turned into a couple of listings, right? So one of the owners I met with, I leased their comic book shop space, and she happened to want to sell it. She's like, well, who do you know? And so I told my senior broker, I said, oh, she wants to sell her center. He's like, Don, you know what? Like, you just got your first listing. Watch this. He called her. This guy's best of the best as far as just sales, like very Bob Knakal-ish for strip retail in the Bay Area. And so within an hour of speaking to her in that call, he basically got the listing for us. And there I was. It was a $6.2 million listing, Alder Plaza, Blockbuster anchored Alder Plaza in Fremont, California, that ended up selling that year. And then in Bob Knakal style, I sent a letter to every freaking shopping center owner saying, hey, I just sold this. I also sent a letter to them I would take a picture, like a color picture of their property, which didn't really happen, in 02, 03, 04. And in my letter, which just said, hey, I want to sell your property, whatever it is, I would print out the photo on just a regular envelope. It just looked odd and different, but they would call me and say, what is this? And so that led to more conversations with owners, which led to more listings. And so I sold probably 2 or 3 more deals. And then after about 2.5 years there, I went to the Staubach company when Roger was really involved. It's now SRS, to go, open up an investment sales division for them in San Francisco.
Right. Well, what I love about what you were doing, and Ed Winslow's in our audience today, the guy who coined proof stacking, but you were proof stacking.
Okay.
You took your information about the deal you did, you sent it out to everybody, demonstrating what you could do, how you could do it. You help somebody else, you can help them.
Correct.
And I love the idea of the picture on the envelope.
Yep.
Great idea.
Yeah.
All right. So you get to Staubach, mostly a tenant rep firm.
Correct.
They want to get into investment sales, and you're the guy.
Yeah. And so I was 20, probably 26 maybe. And we had a whole team there. We had support. That was great. And we did well. We sent letters, we just sold this. Every time we would sell something, I'd add it to the resume and just like send it out. And so I was there a couple of years. It was good. It's just like, for me personally, the like large company brokerage environment didn't fit mom and pop strip malls back then. A lot of the clients in the Bay Area, which own these like kind of B and C centers, they didn't need that brand name. It didn't really help. I think now it's different. And so decided 2 years in, the guy there, Matt Alexander, who still runs an office, great guy, gave me a chance. I was like, Matt, my heart's not here right now. I'm sorry. I love you, man. Gave him a hug and opened my own brokerage shop in late 2007.
But before that, you bought your first deal.
Yeah, that's right.
Before that, in 2006, right? And explain
Yep.
to the crowd what was that first deal? How did it come about? You weren't looking to be an investor, but go through the story. So you're brokering, trying to sell strip malls, and what happened?
It's actually a wild story because the guy that I met with that was selling that property, he's actually an avid follower of StripMallGuy now and doesn't know that he's a reason that we're all here right now. And actually we'll be at the gala, which we'll get into, but So, this center hits the market and they wanted 1.4 million. And the very back space was way off the street. It was, I think, 800 feet and it was vacant and had no visibility on Fremont Boulevard. And so I realized right away that, wait a minute, if I create visibility by spending $9,000 or something on a monument sign on the street, your name here, I could lease it out really quickly and, and then sell it, which would add 400,000 in value. And so I really saw no downside whatsoever in the deal. We bought the property, put up the monument sign, leased it, and then sold it like a year and a day later. Literally, I couldn't wait for $1.8 million. So everyone doubled their money.
Did that owner own other centers as well? Or was that their only property?
Their only asset, correct. And so, and for me, I didn't know that was a business plan. I just thought, I'll get the listing and then I'll make a bunch of money on my 100,000, which was a lot back then for me. And then when we sell it, I'll get the listing again. I didn't know that was actually a business. So when I got done, everyone's like, well, can you do that again? I'm like, well, yeah.
Yeah, but let's talk about the deal, because this is what I find interesting, is that you saw something in the property that the owner didn't see. And it could very, very well be that, people get so comfortable in their environment, they start to lose sight of what their environment is. Like you go into a store, some of these mom and pop stores, and there's like dust all over the place.
Yeah.
And the people who work there and own it don't see it because they've been coming in. This had been happening incrementally over time. They didn't see the opportunity. So this owner obviously didn't see the opportunity of putting up the monument sign, getting the space leased, creating value. But
correct.
That's the result of doing what you do every day and being involved in the business and seeing how people create value and that kind of thing.
Yeah. I mean, every property that we look at, I never see what's there. My eyes see what can be there, right? And so, 95% of the strip malls in America are really owned by, locals. They're not owned by institutions. And it's a lot of families. It's like, a few siblings own it and, figuring out what the market rent is and how much TI package they can give a tenant on renewal, or how to recruit tenants, or, adding value through lighting or a facade, or changing like the parking around, like simple things like that. They're just not looking at it every day. And so, it's definitely an advantage because like most folks in the business who own these things, it's not their full-time job. It's just not what they do. And so it certainly gives us an advantage.
Got it. So 2007, you start your own firm.
Yeah.
Tell us about those early days.
Yeah. It was fun. It was exciting. It felt crazy a little bit. I find everything that in my life that led to a lot of growth feels crazy in the moment. It's like, what the hell am I doing here? And so we rented a little office on 2nd Street in San Francisco. There was 5 of us. It felt cool going in. I worked long hours. I was going to make it work. We had the big board of how many spoken to owners that day, and it was every city. Who do we talk to? What are the leads? It was very much like high energy. And then one day the phones just stopped ringing like they did for everywhere else, and I had overhead now.
08, 09, GFC?
No, it was 08. It was like a year into this. It's like, right? And I remember it was like days and weeks, and the phone's not ringing. It's like, how often can I rah the employees and tell them, okay, just wait it out? And they were in their early 20s, younger than me even. It's like I didn't think that I had anything to offer them at that point. I'm like, look, we're cold calling owners, trying to get listings. There's no buyers. Lenders aren't lending. I don't even know what to tell an owner. And so that went on for months and months. And eventually we had to make the call, okay, like this isn't going to work. And we just shut it down. We shut it down. And, the next few weeks I just spent it was just downtime and not really much going on. So I've never been to Europe. And on a Friday I said, I'm going to go to Europe on a one-way ticket for 3 weeks, just because I want to just, clear my head of all of this. And it's scary when there's nothing to do all day, right? It's just like, I think in life, being busy makes you happy. And it was the first time where I'm like, what am I going to do tomorrow? Or it's Monday. It's like, what am I going to do tomorrow, Tuesday, Wednesday, Thursday, Friday, the following week? And so I had to make a change. And that was.
Now, when you're in
was
Europe,
hard.
were you like checking out the retail, or you just totally decompressing?
I was checked out. No, I was meeting people, and I had mutual friends in different cities, and just hopping on the train and backpacking. Like I had one small backpack, like the JanSport, like no luggage, would just wing it. Hotels.com. next city is where, Sweden and whatever it is. And, it was probably ended up being like 6 weeks. It was amazing. I did it for like 10 grand too.
Mhm.
I don't know how. So
Awesome.
yeah.
All right. So we get through the GFC. What's the next step?
Came back, and then luckily at that point we bought and sold 2 deals, and they went really well. And then I got back, and then the Blockbuster video property happened, which was for me the game changing moment. I'm getting goosebumps right now in my career.
So talk about the deal.
Yeah. So it was Blockbuster Video hit the market as a single tenant deal, 6,000 square feet, San Jose, California, on a great corner. 6 cap, $2 rent. It was on the market. I won't say the site. Like a Craigslist-like product back then.
And $2 rent in California, that's $2 a month.
Yeah.
$24.
I still
Yeah.
got it. I still have
Yeah. No.
So, I'm gonna stay like on the California numbers, the rest of this equation. But so I'm looking at it, and it's on the market at a 6.25 cap. Nobody wants to touch it because Blockbuster, everyone's thinking obviously is going to go bankrupt. And I'm looking at it, and I'm like, that's a $3 market, because if it happens, then there's the upside. I'm looking at it on price per foot, where the market was like, why would anyone be dumb enough to buy a 6 cap with a tenant that's definitely going out? And so, got all excited again, called my same investors, and I said, look, AutoZone, I know will pay for this, $2.75, $3. And they wanted the site. And so, why don't we buy it? And worst case scenario, Blockbuster stays. And then, we have our 6 cap. And one day if they leave, I have a backup. And so we bought the deal, negotiating with AutoZone. Blockbuster ended up like 6 months later closing that store. They were in bankruptcy maybe a year later. And so we're all set up. The AutoZone deal, all good to go. And suddenly it dies. Whatever, it got killed at committee for whatever reason, which happens a lot in our business, obviously, at committee. And so here I am. We own a vacant building, Capitol and the Key in San Jose, and I don't have a tenant anymore, and I don't really know what to do. So like, well, the market rent's higher. Let's put it on the market and see who else is out there, because I do know that it's a $3 market. And so we get offers right away from Panda Express, Chipotle, T-Mobile, all these great operators, but they only wanted like 1,200 feet, 2,000 feet. And I'm like, I don't know how to make a Blockbuster building into a shopping center. I know nothing about construction, architecture, like civil engineering, like, all these things it takes. And so I said, well, let me go study what to do. And I met with Charles Kahn, that we do a lot of work with out in the Bay Area. And, he came up with a rendering of what it would look like if Chipotle, Panda Express, and T-Mobile did that deal with us. And, it looked good. And I went to them and I said, here's what I can make it look like. And then so I started meeting with contractors and saying, well, what is it going to cost? I don't know I literally have no idea what it costs or what building plans, how to read building plans. And so it ended up being like $1 million all in for the project. And I think that the rents were like 4.25, so like $48, whatever it is, or more. And so it really penciled more than I thought. And I said, well, okay, let me go. Let's just do this project. And so Panda and Chipotle both wanted the end cap. And they're like, oh, like, we're not going to do it if we don't get the end cap. I ended up giving him one of each end cap. They were happy. And so, yeah, I went to the site every day, learned how to read the plans, met the GC out there, understood, like the MEP. I didn't even know what MEP was. And like, we had to upgrade the power, I think the gas, monument signage. I think it would cost $4 million literally today to do the same project. And so we leased it to them. We ended up buying the property for like $2 million. We put $1 million into it, and then ended up selling it for $5.5 million. And so suddenly I know construction. Like, well, I can now do deals that I never could have done before, and do remodels, which is now a lot of how we add value. So that was the Blockbuster story.
And so that deal was just so compelling. You learned the business on the fly because it made so much sense to do it.
Exactly. Which again, it's identify what this could be on day one, not what it is. Which, like, the market saw a 6 cap property with a bankrupt tenant, and I saw opportunity.
So Don, by 2010, 2011, you're now full-time on the investment side of the
Yep.
business.
Yep.
And it's a great time. I know here in New York, 2010 value bottomed out.
Yep.
2011, the ride started
Yeah.
up and the good times were rolling. Was it the same in California at the time?
The Bay Area didn't like crash like a lot of other markets did, but it was like folks were kind of looking around. What do we do? Do we start buying again? It was just like a kind of a low volume market, But we start buying things because those LPs wanted me to do that again for the fourth time and a fifth time. And what was holding me back was what I was taught was that real estate is about knowing your geographic area and don't go beyond it. So, I thought I was doing these deals and doing well because I knew Alameda County, Santa Clara County really well. And so deals would come up in the East Bay, which is, like in Tracy and Brentwood, which is an hour away, but different brokers, different, like the rents are half, a third to a quarter or half. And so I was intimidated by the idea of doing deals outside of like the core that I knew because I was taught, well, like know your street, know your county, your city. And so finally, a deal came up in Tracy, California, and I looked at it. It was on the market, and it had all the same fundamentals that I was looking for, like lower price per foot than in the area, and just like the layout, the tenant mix. It was shallow bay, everything I looked for. And the tenants were all paying like 60-cent rents. You do the math on the conversion to the East Coast. But I couldn't find one deal that was under $1 in the market. I'm like, why are they paying 60 cents where everything else is $1? So I go out there and it checks all of our boxes except for it's outside of my bubble. And I said, you know what? Let's go ahead and make the leap, do the deal. We bought it. I think like 7.5 cap, and every tenant renewed at market. And it started with, if you raise the rent, we'll leave. Well, that liquor store that told me that, he and I both know that every liquor store in Tracy is paying $7,000. He's paying $4,500. He knows that he'll pay $7,000 and can, and it's busy, And my chip is, look, pay market rent, which by definition, a viable tenant can pay you a market rent. If they can't, then they're working for the landlord and they really shouldn't be in business, really. And so my leverage is, I'll give you a 10-year lease, where like a lot of owners who are sellers don't give long-term leases because they think that the new buyer might want to, whatever it is. But I know when I give someone a 10-year lease, they can then sell that asset. It's valuable. And so we renewed, I think, every single lease. Nobody left. They're all, I think, still there now. And that was like our best deal, basically. And so that was when I realized, okay, I can do construction and I can do deals outside of my bubble. And then so.
Right, but the bubble's still kind of small.
Yeah.
When did you venture out of California, and what was the decision-making process like when you did that?
Sure. So we ended up doing a version of what those first 3 deals were 29 times in a row and exited 29 times in a row, all winners. So, I get asked, have you lost money? I wish that we had, because it would sound more credible, but we, knock on wood, we so far so good. And so, we were, California only. And my issue was in calling brokers outside of California was I knew that when I was a broker, if a principal called me from Texas or New York, Florida, and I don't care if they're a billionaire, whatever it is, I don't care what they owned, there's no shot I'm thinking of them tomorrow when my next deal happens, because I have my local buyers who I think of all the time. They call me every other day or every week. And so, it sounds weird to a broker in Texas if someone from San Diego calls, the buyer's like, hey, send me all your deals in Houston. And she or he is like, I'm in Houston. I have 50 buyers. Why would I call this random guy? So like, I knew how awkward that came off. So as a buyer, it was intimidating, right? And so I would never venture out. And so 3 years ago, I called a Marcus broker at the time. I think his name was Ray King, I believe, in Texas. And I called him and did the whole pitch. Hey, we're a great buyer. There's no hand holding. We're always going to be all cash. We move quickly. We can close any deal in 30 days. Like everything that brokers want to hear. Like, after we sell, we'll use you again on the sale. So it's like, it's what they want to hear. But he just like I expected, was like, okay, sounds good. You know, I'll send you things, but he's not going to think of me ever again, right? And so then social media happened, which, you know, we can get into that. But the move to New York happened at the same time that the Strip Mall Guy came up. And, you know, that brand has
Well, what was the
now,
first? Let's go through.
yeah,
I'm curious about the move getting
yeah,
outside of
yeah,
California.
yeah.
Was it a conscious decision where you said, you know what, I think Dallas is a great market,
No,
or I think Chicago is a great market, we have to go there, or you were making relationships with brokers and the deal that was compelling led you to the
yeah.
first market
So
outside?
our timing was funny because as we raised for this fund that we're now, you know, almost done deploying, we launched the fund. The first deal we bought was in April of 2022, which means that I started raising like the year before, like mid-year. And my pitch to LPs was, it's mostly California, but we're going to do deals outside of California. And the way that I viewed that, it's just like our Tracy deal. I said, look, on Tracy, it was different brokers, different rents. I'd never been there in my life, literally. It's a great town. You just don't really go there. And so I said, look, like Tracy might as well be a deal in Tucson or in, you know, Naperville, because it's the same idea. It's like, you know, I can see the layout. I know if the rents are market based on price per foot. You know, I can figure out market rents the same way I did with Tracy. And so that was the idea. That, you know, I knew it would be a challenge, but I was confident that we can duplicate this. And you know,
But by this time,
yeah,
by the time you're raising the first fund, you're already in New York because 2020, right? Morgan gets an opportunity here.
he really
Morgan's
studied
done
it up. Yeah, yeah,
so you come to New York and you're doing the fund.
yeah. It was the pandemic, and my wife got into a program at Columbia, like, you know, this like niche law program. And it was, you know, everyone's work from home anyway. And, you know, she's like, wait, I really want, it's Columbia. This is a dream of mine. I was like, this doesn't make any sense. But it's like, you know what, our son was like 6 months old and she wanted to do it. And I said, you know, why not? Why not? It'll be 9 months in New York. So we got to New York City, and I started realizing that, you know, unlike the Bay Area, everyone that I meet wants to talk about real estate here. So I feel a lot more at home. In the Bay Area, literally no one wants to talk to you about real estate. It's all tech. Otherwise, like, real estate, what is that? Is that like homes? Are you a realtor? Whatever it is. And so it felt more natural, better networking here. And, you know, as I started thinking through, well, we want to have a national presence, and, you know, New York makes sense. James Martin in my office, who's my right-hand man, been with me for 10 years now, runs the office. He's great. He can run our office out there, but it's like, it's hard to pitch LPs and say, hey, I'm going to be a national buyer if you're only in San Francisco. So like long-term being, you know, in New York, NSF made sense. So we extended our trip here, still had my condo that I always tweet about, the HOA in San Francisco. And so, you know, I had the condo there. It was always temporary here in New York. We kept extending it. My wife wanted to stay here. I'm like, this doesn't make any sense. I can't stay here. What do you mean? I'm a Bay Area guy. We're going to live in Burlingame later, like my dream was. And so there was real no concrete plan to stay in New York, but like it started making sense for the business as far as capital raising, just, you know, just like the meetings that I get and can have here lead to information that I can't really get on the phone or via Zoom or whatever it is. You know, it's the real estate capital in the world, you know, of the world. So it made sense. And then Strip Mall Guy happened, which
June of 21.
June 4th. He was born June 4th of 2021.
So gotta
Yeah.
talk about, and I have to tell you, the Strip Mall Guy has become such an unbelievable brand on social media. And you know, I remember early on, you know, I had gotten onto social media in January of 23.
Yeah.
And about 2 or 3 months into it, I get a call from my social media manager, Mo Regalado. He said, BK, you got a response from Strip Mall Guy. I'm like, who the heck is Strip Mall Guy? This guy has a bigger following than anybody in commercial real estate. You got to respond to him right away. Please go, you know, get back to him. And that's how we became friends.
Yeah. No, I mean, it happened by accident. I had no desire or plan to be to be public in any way. I loved how my career was going, and I didn't want to shake anything up. And so one day I was on an airplane killing time, and I don't love the narrative out there on social media of take on a lot of debt and mailbox money and everything's a hack and it's easy and passive. I hate that word, passive. And so like you read all this and it's just not true, and it's written by folks who are actually not in the business for maybe during those 5 years where things were just crazy, where everything just sold, but it's like folks that are in it for a while know that real estate is a very difficult, stressful, hard, complicated business. It's a great business, but it's a hard business, right? And so I said, wouldn't it be great to put the narrative out there that I believe is the right narrative, the same one that I share with my LPs, right? That I would tell my family or friends as far as my opinions. And so I'm on this airplane, and so I never want to tweet under my name because I don't want maybe some employee will get offended, or I don't necessarily want like our tenants reading it or friends or investors. And so I was hesitant to put anything out there, just fear, right? Fear. And on that plane, I said, what the heck? I'll just open up an anonymous account. I'll just tweet a few times and I'll close it, and it'll just be, me getting it out of my system. And that was it. And so I really was going to be Real Estate Bill, but it was taken, and Real Estate Bob. And then that was also taken. And I have no idea why Trent, that I don't even know anyone named Trent, but Trent popped in my head, and I said Real Estate Trent, and it's just available. I'm like, all right, Real Estate Trent. And I just started posting random things like renewal options and parking ratios.
But under the name StripMallGuy.
Yeah, under StripMallGuy. And people just started liking it, and it started growing. And next day I had 40 followers. I'm like, 40 followers. After 10 years on my other account, I had 48 or 200 followers. And so, I had a quarter of that within a day, getting too excited. And, so I just kept going and just posting just random, just industry knowledge. When you're negotiating, if they make the first move, that's better. Don't buy a property unless you have a phase 2 environmental report. It's just things that I don't think are that interesting, but they're real. Next thing I know, it's a week later, it's 1,000 followers. I was freaking out. 1,000 followers? That's crazy. I have 1,000. And then folks on Real Estate Twitter, Real Estate X now, Keith Wasserman, Moses Kagan, a guy named Mark Gilbert, they started retweeting my stuff, right? And it just started, it hit 10,000, I think, within a month. But I was very weirdly serious about keeping it anonymous. I didn't tell anyone other than my wife because it was scary. Who are these people? Is this some issue with the algorithm? And I didn't want to rock the boat, so I was very secretive and kind of weird about it, right? And then I hit 20,000 followers, and then I started getting all these DMs coming in. That was the game changer, because I realized that.
Well, for several years, you used a cartoon face on your body for pictures and things like that, and you were very, very secretive about.
Yeah, before you, I was even more I was just if I thought maybe a friend would know, I would okay, does that friend know it's me? And I just I didn't know what rocking the boat and being this having a large following would do, because I don't want to disrupt my business in a stupid way like social media and what am I doing? Everything's going great. And so I think by then I raised $100-something million over the years, and that was growing, and it was good. And then when DMs started coming in, I started realizing the folks behind those impression numbers, right? It was heads of banks and people in the real estate business that have big portfolios, and it resonated with them a lot.
Yeah, Don, talk about that, because that's one of the things that really is very impactful on me and gave me kind of even more incentive to become active on social media. You were getting real business opportunities.
I had no intent for this to help my business in any way.
But what a perfect way to find deals. So, now you have hundreds of thousands of followers. And brokers, now I think it's so interesting, brokers want to do deals with you because they want to do a deal with the strip mall guy.
Yeah, it's wild. And so, it started with those DMs, and then, understanding that these are legit people that are in the business that respect and like the account, which then my network started blowing up. All these folks that I would never meet with, they wouldn't know of me. Jeff Blau was anonymously following me. I never knew that. And so we met in person, and he's like, oh, Don, I send my kids your stuff all the time. And I'm like, Jeff Blau, the guy that runs Related, no strip mall guy. He's like, and then we actually met at his office a few weeks ago. And so I realized based on those DMs that I was making real connections, and, it made no sense for me to be anonymous because, how do you, like, if a broker has a deal for you and you're anonymous, what good does that do to you? Okay. And so I met with Kyle Matthews about a year and a half ago now, and we had this breakfast, and he almost gave me this intervention. He's like, Don, he's like, every week someone calls me with a deal for you and says, do you know StripMallGuy? He's like, imagine how many deals you're not seeing. Like, this is crazy. Just like, stop being anonymous. Trust me. But it's like, I'm an introvert. I don't want to rock the boat. I don't want to be a public person. It's just not who I am. And so I was like, Kyle, that'll never happen. You're crazy. But then I went home and I thought about the hardest thing for me in this business, historically, is not capital raising. It's not executing. It's knowing that I'm going to find my next deal, right? And so, I can never predict that. And now all of a sudden, Ray Kang in Houston, he knows the StripMallGuy brand. So then I called him, like, hey, Ray, StripMallGuy. Oh, I love your stuff. And then he started sending us deals. Where 2 years earlier, I don't blame the guy, he's a great guy, he wouldn't have thought of us. And then I'm like, holy smokes, this could be a way to, crack the code on, like hacking, scaling top of mind nationally, right? And so most of our deals now happen because of the brand. The folks at the national large REITs, a lot of them follow us now. We did a deal with Terreno last year, a public REIT, $5 billion company, industrial. They sold us a strip mall, and I don't know that they knew the brand, but they probably did. I mean, it gives us, it's basically surety of close for folks that are looking at a sea of kind of random buyers that are non-institutional, right? And so if you're, an institution and you want to sell a strip mall, like, there isn't like you're calling, Blackstone or whoever. You're like, okay, well, who buys these Class B centers? They're all mom and pop people. So it's like,
In such a counterintuitive way,
yeah.
an anonymous account basically gave you credibility, which is kind of really weird to think about.
Yeah. I mean, that was what's made it great, because like it basically validates for me that they're enjoying the most of the content, at least. And so it helps us with deal flow. There was a broker that DM me. He's like, hey, I live in Crown Point, Indiana. I never heard of Crown Point. You haven't either. And so I'm like, okay. He's like, the strip center is for sale. It's a great deal. My family goes to the vet here, every month. Look at it. So Crown Point, I don't know. So I pull up an aerial. I'm like, oh, it looks interesting. The same attributes as Tracy had. A few days later, I fly in there. It's this booming community, below market rents. They're building 2 hospitals, everything I look for in a deal. So now we own a shopping center in Crown Point, Indiana, that we just renovated, renewing leases. It looks great. It hasn't been touched in about 50 years, and now it looks modern. And so there's a deal directly from, the brand. And so it's adding value to our LPs in ways that I never thought was possible, which is really the most important thing.
Right, absolutely. So Don, I remember shortly after we started interacting, I reached out. We had lunch. Wanted to get to know you. Who's the strip mall guy? You were kind enough to write a very flattering piece on me on social media, and I picked up like 10,000 followers within the next couple of days, which is great. So thanks for that.
Yeah.
But it's been so great. Our friendship, our relationship that grew out of that. And then what gave you the idea? This episode will go live before the gala.
Awesome.
On May 1st.
Yeah.
And how did you think of the gala? Why did you think of the gala? What was and thank you for letting me co-host last year,
for sure.
Co-hosting again this year, which
and I'm
I
sure
can't
next
wait
year,
for.
Yeah.
But what gave you the idea to do that?
Yeah, so the first year I was really guarded about StripMallGuy, the brand, and being anonymous. And then after that, I would start like telling people here and there based on context and brokers and everything. And after a year of doing that, like I realized no one was like posting about it or like sharing it or like calling me out. I was like, okay, well, there's a circle of trust, and it's just like, okay, so why not just meet people in person? And so I was at the zoo with my wife and just thought of this idea. I'm like, why don't I just like do a meetup? I literally like spur of the moment, and I opened up my app. I was like, okay, 50 people, real estate talk, no phones, New York, who's in? It was just on the whim. It was like all this, all these likes, clicks, DMs, and I'm like, okay, I guess I'm doing this. And so I wanted a cool venue in New York, and so we picked Soho House. CREalEstate jumped in and sponsored, which was amazing.
Our great friends at CREalEstate,
Yeah.
thank you for that.
Thank you, Mike. CREalEstate Mike. And so didn't know what to expect, was nervous as heck to be, meeting people. And so had the event, and it was funny because as everyone was filing in, like no one knew my face or whatever it is. And so I was just mingling with people, and they're like, "Oh, StripMallGuy, like, have you met him yet? Is he here?" And I was like, "Oh, it's me." And they're like, "Really?" And so like I was just walking around like I would walk around ICS, just like everybody else, which is my comfort zone. Right? I like that. And then Beth Azor co-hosted with me that year, and she went on stage and then introduced me, and I went up there. I was like, "Hi, everyone," and I was just like, it was a very weird life moment, and I gave my spiel. I gave the story. It was first time I'd ever really been on a stage other than like speaking at a wedding or something, and it went really well. Folks had fun. It was went all over social media, and we said, why don't we do this again next year? And so it's kept going and getting bigger and better. So,
and it's great. One of the things I find it has the most impact on me is we communicate with a lot of people on social media, never having met them, and then the minute you met them, you feel like you've known them for a really, really long time.
Very much so. Yeah, it's funny because like almost everyone I meet is exactly the same in real life as they are on social media in a way. So it is almost like that long lost relative at the airport feeling, which I think what the gala really is. It's that joy of seeing people that like you feel are in your life, but maybe you haven't met, because I mean, really, we spend more time with these folks, interacting with them, all of us do, than we do with our family in a lot of ways, right? And our friends, right? So if you're on there every day, you see all these folks that they become in a way our closest friends, right? And so it's fun to see them in person. There's a lot of hugs going on, and a lot of shots, and people have a lot of fun. And so yeah, it really is a wonderful event.
Yeah, well, Don, I have to tell you, I'm so glad I got on social media, because we wouldn't have our friendship that we have, which is very important to me.
Absolutely.
And very thankful that we have become friends. Great to know you. So successful in real estate. Keep up the great work.
Appreciate it a lot.
Thanks for being on the Bob Knakal Show today. And, we'll see you at the gala.
Yeah, love it. All right.
Hope you enjoyed the show, guys. You don't want to miss the next episode. Please subscribe. And don't forget, there's an opportunity to be in the live studio audience. So follow us on social media, and we'll make announcements about when the next filming is going to take place. We hope you enjoyed the Bob Knakal Show, which again was presented by our friends at CREalEstate, the most powerful platform on which to prospect, evaluate, connect, and close any real estate transaction.